you want to lead us off first with just any insight as to if you made any moves in the market this week, if there were any earnings that stood out to you. I know you're more of a fundamental and long-term perspective, but would love to just hear from you on your thoughts.
Yeah, for sure. Thanks for having me. As you kind of said, I approach investing at a snail's pace, I like to say. So I do keep a somewhat elevated cash position, and I have been deploying that cash pretty aggressively. So I've gone from like almost 16% cash to around 14%. And I know that sounds like nothing for a lot of people, but for me and how I approach things, a 2% cash position reduction in 2 weeks is pretty notable for me. And I'm a long term investor, but I'm a long term investor in these high growth innovators and disruptors that are that have been getting shellacked over the last couple of weeks. But to me, and we'll hear a lot of really smart people talk about technical signals and how they use those to guide their trading. And to me, taking kind of a different approach, not a better approach, just a different approach. For me, I'm really looking at those forward multiples and the forward growth CAGRs and the returns that I think I can expect. And as companies like let's say for example like a Lemonade beat on expectations on the top and bottom line every single quarter and raise guidance, but see their multiple compressed from I think it was like something ridiculous like 80 times sales at the top, and now it's down to like 20 times gross profit after kind of growing into its shoes and then also getting cut in half. So it looks extremely technically broken, and I acknowledge that. But for me, leaning in and using that really long, ultra long 5 to 10 year time horizon, and looking at all that multiple compression in a company that's clicking on all cylinders, I'm generally using that divergence from stock performance and company performance to really lean in and add to names, like I've been doing in a Lemonade and like I've been doing in a company like CuriosityStream that's been firing on all cylinders and has a stock that is has absolutely been obliterated, and I mean 70% growth and a single digit gross profit multiple. I won't go too far into it, but yeah, that's really what I've been doing, taking this opportunity of indiscriminate selling in growth stock land for Mr. Market, really honing in on and identifying which of my holdings are thriving and which deserve more capital allocation with lofty growth and expanding margins and wonderful optionality and under promise over deliver and those things that we all really appreciate. And I'm kind of not ignoring stock price action, because I do use technical signals to guide my accumulation, but just going very slowly, adding into these healthy companies with broken stocks very slowly, in frequent bites over time, and that's resulted in the cash reduction for me over the last 2 weeks. This week been very choppy. We haven't really tested a lot of new lows. I have added to one name pretty aggressively. That's SoFi. I've talked to Wolf and a lot of people about why I like SoFi at length, so I won't get into that. But yeah, that's just going along with the theme of a clicking company in terms of demand and margins and profitability and successful product launches, and then multiple compression just absolutely obliterating the stock. So I really get excited when I see things like that, and I acknowledge that you need to keep a little bit of a cash position to be excited. You need to have access to fractional shares and commission-free trading, which I fortunately, thankfully, gratefully do, because otherwise, I mean, when I'm buying in this small, one basis point of my cash position at a time, I would need to be a millionaire or a billionaire for that to be full shares, and I can assure you that I am not that wealthy at this point in time. Hopefully, one day in the future. But yeah, that's really what I've been doing. I'm happy to talk about any of the companies. CrowdStrike's earnings were phenomenal last week. So I was really excited about that. Can talk about that if you want me to. But that's probably enough time for just the opening spiel. And yeah, that's what I've been doing.
Yeah, I definitely would love to hear a few more minutes on some of these names. So definitely we've gone down the rabbit hole on SoFi, and we have those recorded and uploaded for people that want to listen through there. But maybe talk about just maybe outline like, which tickers you did add to, and then you can kind of give like the 30 seconds to a minute on like why you added to them. So, on CrowdStrike, for example, or some of these others.
Absolutely. So last week I actually added to nine different tickers. So maybe I'll talk about the two or three of them that I added to most aggressively. And SoFi SoFi was one of them. So I'll just really high at a really high level. SoFi's super app, one stop shop for financial banking. allows them to compete on price in a very commoditized sector. That enhanced LTV that they get allows them to offer better interest rates and all these things that consumers focus on, which is why they're able to lean so aggressively into marketing and buy the naming rights of things like SoFi Stadium. And then you complement that with their B2B segment, which is Galileo. They sell APIs, payment processing APIs to companies like Robinhood and companies like Dave.com and Chime and all these Goliath neobanks. So they're really benefiting off of this tide lifts all boats in fintech, aside from having to build a brand, even though they're doing so very successfully. So those two complementary business lines really feed on each other and allow them to do a lot of unique things within this really hyper competitive space. And in the meanwhile, they're producing a 30% incremental EBITDA margin on new revenue. Anthony Noto is a shining star. I've gone into that a lot. And then let's talk about GoodRx. That's another one that I've been adding to extremely aggressively. So another one of these companies that came out extremely hot out of the IPO, and I had to be super patient with adding to the first several months. But I mean, now we've got like a 40 times forward EBITDA multiple. We've got 30%. We've got over 30% growth, and we have this while they're kind of so GoodRx. Their main business segment is prescription transaction volume. So that's really very tightly correlated with elective care startups. So think about the COVID-19 pandemic and how elective care all but halted. So that business segment really took a large hit, and they've still been able to meet their revenue and EBITDA margin guidance for 2021, and that's because these other products that they have. I'm going to post a deep dive on GoodRx on Sunday. It'll be free to read, so I won't go too deeply into these products. But they have something called a pharmacy manufacturer's benefit solution, which essentially they're leveraging the 20 million monthly active visitors they have on their platform and using it as an advertising vehicle for branded medications, for these really expensive branded medications that have discount programs that really nobody knows about. 3% of eligible people know about them. So GoodRx is really putting these discount programs for branded manufacturers with very little variable costs, so that they can accept a lower price with still compelling unit economics. But they're doing that to kind of diversify and expand beyond this core prescription business. And the other thing they do that I like so much is their approach to telehealth. So another one of those spaces that's extremely commoditized. I do own some Teladoc, but that's a whole different investment case versus this. The thing I like so much about their telehealth approach is that they're selling these products at cost. So they're using it as a cost neutral marketing vehicle to cross sell for the rest of their products. And I mean, at the beginning of the year, 30% of their telehealth startups were turning into subscription or other revenue, and now that's 65%. So they've more than doubled the cross-selling rate. And then you just juxtapose that with what I've been talking about, a pretty reasonable EBITDA multiple for a company growing over 30%, and with all this optionality and playing in a healthcare TAM that's $4 trillion in size and expected to grow to $6 trillion this decade, in a company with one of the leading consumer brands in healthcare, one of the most intuitive interfaces in healthcare, and friendly and inviting, and all these things that they've spent a ton of money on. And the reason, and then kind of, actually, I'm not going to go into why their prescription transaction volume revenue is so sustainable. I talked about that for like 10 pages in the deep dive. So if you're interested, it's a truly fascinating company, and I would, I mean, not to promote my own deep dive, but I think it's good work. So if you're interested, it'll be out on Sunday. But yeah, SoFi, GoodRx, I've talked for a long time, and we have a couple other awesome speakers, so I can talk about like CuriosityStream and Duolingo and Lemonade later on, but I want to give everyone else a chance to talk. So I'm sorry for if that was too long.
No, that was perfect, Brad. And we definitely, I think, should have that time. And listen, man, when you're talking, it's always gold. So everybody, make sure that you are checking out what Brad's doing. Scroll through his profile while we're here, throw him that follow. And if we have that time towards the end, I would love to loop back around and get some insight on those.
Thank you.
Okay.
The feeling's very mutual, my friend.
Sounds good. Awesome stuff. Okay, everybody, we're going to keep things rolling here. Right on over to Richard. So a little bit different style, which I'd love to hear about your week in the market, maybe any swings that you placed, anything you bought, sold, and anything in between.
Hey, how's it going, everybody? So yeah, just so everybody knows, my time frame is much more of a trader, swing trading, position trading, usually liking to hold stuff for a few weeks, few months if the market is right. But in conditions like this, I've been chopped up a little bit this week, so usually just holding a few days, honestly, and I've gotten stopped out shortly after I bought some stuff. The main things I was trying this week is some semis, Nvidia and Qualcomm, also a leader, Roblox, and also tried Rivian, a pilot test buy yesterday. So I'll talk through kind of the rationale for each of those, and also yeah, I'm out of everything right now. Just so you know, I've got stop flat or for small losses on all of those, and that kind of happens if you try to trade how I do and manage risk tightly. So first of all, semis are showing really strong relative strength. That overall group is super strong, and that's always what I kind of focus on here. The overall ETF SMH is right near all-time highs, holding that 10-day moving average when the market is decidedly below that. So definitely want to be focused on the leading groups and then trying to find the leaders within those groups. Nvidia has been one of the strongest stocks in the market. It was a leader, had a huge gap up on Tuesday, very strong action. Then an inside day on Wednesday, and then I basically was stopped out yesterday, pretty much flat. Maybe a 0.5% loss on my position. And because we're not yet in a super confirmed uptrend, these were smaller than usual positions. I'm also managing risk that way, not just with pretty tight stop losses, but also with lower than average position sizes. And just to get in a little bit into the market conditions, I kind of judge the market in a few different ways. First of all, I look at feedback from my recent trades. How have they performed? Are they all up? Or have I gotten stopped out pretty quickly on all of them? And this week is definitely an example of the latter here. Things just aren't really following through, and things are getting gapped up, then sold down, which isn't really a sign of a healthy market, at least in the short term, in my view. Second, I look at the overall market, the market indexes. What is their trend? Usually that's as simple as, are we above a rising 21 exponential moving average? And we did actually retake that this week with that huge day on Monday, Tuesday. But we did never kind of build above the anchor VWAP from highs. If you put a anchor VWAP from those highs, I was looking at Nvidia. But we did build above that, but we sold off yesterday into the close. A lot of growth stocks were acting well in the morning, sold off, so a downside reversal, and we're seeing a little bit of mixed action today. The last part of kind of how I view the market is the market leadership. How diverse are the groups? How are the overall leaders doing? And right now we're still pretty narrow, just restricted to the semis and a few other names like Roblox. So overall market conditions for me aren't super pristine. So that's why I'm managing my risk a little tighter, keeping those position sizes a little lower. In terms of the other names that I was swinging, Nvidia, Qualcomm, I tried those. Qualcomm, I tried the breakout from the inside day yesterday, but ended up getting sold on that flat because it just didn't follow through. And it still looks pretty set up. If we go sideways, I think that would set up another really nice opportunity. But right now, for me, I'm still waiting for a kind of tighter price chart and another setup to appear. Rivian was more speculative. This was actually a smaller position, just a pilot. And I like this because in the morning yesterday, it was showing clear relative strength versus Tesla and also Lucid, which are the other big EV players. And this was just kind of a test buy. I like the overall pattern we're within an IPO base here. It had pushed off the lows on Monday, 12.6, and was going quite in tight. And yesterday was actually the lowest volume ever traded. So we could be seeing kind of the start of the IPO base bottom. So I'll still be watching this one very carefully. I know the valuation is crazy, but I'm a technical trader for the most part, a story trader. And I think price and volume action kind of reveals the true story of how institutions are viewing the future of companies. So if stuff is holding up well when the market is selling off, that tells me that they're being supported. But if stuff is stuck under a declining 50-day moving average, 21 exponential moving average, that tells me that net institutions are distributing stock, and at least in the short term, things aren't going too well. So that's a brief run through of kind of what I've been trying. I've gotten stopped out for flat or small losses for the most part. So feedback isn't great, as I said. But overall, we'll have to see how next week turns out. I have no idea where the market's going to go from here, but following the price action of the indexes and the leaders should kind of guide how exposed and how aggressive I should be in the market. And right now, yeah, not terribly exposed, just waiting for better setups. And I would love to see it just go sideways and kind of correct through time rather than price over the next few weeks. I think that would set up some really nice opportunities into the end of the year, but we'll just have to see. So I know that was a little bit all over the place, but yeah, any follow-up questions or any questions at all?
Yeah. I'll hit on that real quick. I think it's amazing that it's crazy, like to watch the fact that SPY is still basically at all-time highs. I mean, it's positive today, and just being held up by these really big large caps. So my two
Yeah,
questions for you is two.
that's a good point actually.
Yeah,
Like if you look at the chart of Apple, we're just riding that 10-day moving average to higher prices. So the super strong action of some of these big mega caps is kind of hiding a lot of the destruction we're seeing in the rest of the market. So yeah, it's kind of an interesting divergence for sure.
definitely. So on top of that, two questions. The first is, have you thought of maybe sticking more or playing more off these mega caps since they're clearly getting a lot of the flow coming into them? Tesla up 0.8% today, Apple's up 1.3% today, and literally nothing else in my portfolio is green. And the other question is, have you considered any short positions or puts?
Yeah, two good, really good questions. So first of all, yeah, Nvidia was kind of my big cap play. It just was in a more viable setup than Apple. Apple, I think we're actually on a space a few weeks ago, and you asked me what I thought about Apple, and it was coming through a really nice pivot at 152, which would have been the really nice spot to get in. But right now, it's just extended from a proper buy point for me, so I wouldn't be looking to play it. If you're trying to just capture a few day move, a quick move, you could definitely play it. But yeah, it's just not quite viable here for me. What was your second question? Oh, short positions. Yeah. So I am not great at shorting. I'm not super experienced with it, so I don't do it too much. But I mean, you just have to manage your risk pretty much the same way. But yeah, I'm not super into that. My mindset kind of leans bullish, so I'm just kind of waiting in cash, trying to not get chopped up too much, keep those position sizes low, manage risk, and wait for for setups on the long side to reappear.
Got it. Definitely makes sense to me. Awesome stuff, Richard. Thank you so much for sharing it. Okay. All right. Keeping things moving along a little bit here. Welcome in. We now have almost 350 people in here. So awesome to see. Just want to give another shout out to anyone who was in the beginning, heard this. So obviously, I've been having a lot of trouble with my spaces over the past week and a half due to connectivity issues as I'm traveling right now. And so big shout out to Kevin working with us on the Wolf team, who is currently on the main account, helping to host that, giving us a stable network, bringing up and down speakers, and doing a lot. So thank you, Kevin. Big shout out to you for everything you're doing. If you want to say hi to everybody.
Yeah,
Thank
no
you.
problem. How's it going, everyone?
Awesome. So Kevin, maybe in a speaker or two, if you want to talk a little bit about any of your stock we can market, if you have any questions, feel free to cut in a little bit. Sound good?
Yeah. Sounds good.
Awesome. All right. Just so everybody knows, that's Kevin Quigley, and he'll be doing a lot of stuff with our Wolf team. So you'll be seeing more of him. Okay, let's keep it going. Gerg, thank you for joining us up here. I've been following some of your trades throughout this week. You've definitely had some good ones with Apple and the short on Baba and I think Lucid. So I would love to hear about your week in the market.
Sup guys, so I think for me this month I'm just having fun. Like I said before, like I think on first or second I said I'm not adding any new position this month, and I sold all of my losing trades for the year. Right, the plays which were down to 100% from January, I sold all of them because I did expect more selling, and I still do for Tesla's harvesting. I did the same thing. Will claim them against Metaxas, but the positions I am long in could be SoFi, PayPal, Palantir. I'm not selling any of them for now. I did add short-term hedges against all of them, but I'm just day trading, right? If you keep, like I think Gav might have seen the Apple and the Baba place. That's all I'm doing, nothing long term. And I'm not holding anything new overnight. Even now, right, I think SPY might drop even more. But if you look at the top right, if you look at the Nasdaq is up 20% for the year, but If you remove the top five names, Apple, Microsoft, Google, Tesla, Nvidia, Nasdaq is only up 6%. Like the previous speaker said, these couple names are carrying the entire market with them. Like Apple, right? Apple is the market. Apple is the biggest component of SPY, S&P 500, then QQQ, also the biggest holding. Then you have Dow 30, and Apple is the third biggest holding. So Apple is carrying the market, and the next biggest is Microsoft, followed by Google. So these three names are carrying the market with them. So you can't compare, right, SPY to all the other individual stocks. Even with the QQQ, most of the stocks are down 20% plus from all-time highs. Even though SPY and QQQ might be 1 or 2% from all-time highs. But for this one, right, I would say take a step back. I would say avoid adding new long-term players. Wait till January to add those back. Like even if you like a play that you're down a lot, I would just sell it and buy it back after a month. I mean, before you do that, talk to your accountant and see that, right? Can you claim it against your taxes or not?
Was that as a question to me? Sorry, I
It
didn't.
depends, right? I think it's different for each and every individual and how your account is set up. I mean, if you trade to a corporation, you might not get the same benefits, and some of them do have a cap. And if you use a registered account, you can't claim them, right? Like some of the accounts they offer you tax breaks from your gains. I think in Canada you have a TFSA. Even if you make a large amount of money, that's not taxed. But the only downside is you can't claim the losses against your taxes. So if you have a registered account, you might be screwed with that. So I wouldn't sell if you're still bullish, but to get the most accurate answer, talk to your tax guys.
Okay. Yeah, I mean that definitely makes sense, and it's not the simplest process, but for sure for people who do have a tax advisor, this is something you should bring up to them. If you're taking massive losses here, if you want to see if tax loss harvesting is going to work for your, personal situation, definitely there's a lot that goes into that. But yeah, good advice all around, Kirk. Anything else you want to add?
So far, nope. Enjoy December, enjoy the month, enjoy Christmas, enjoy New Year. Take a step back. Like this one,
It's a good
right?
time.
I do expect volatility to be higher, so that's why I'm not adding anything long term, right? Even though like so far I had $15. Like I love so far $15, but I'm not buying that now. I'd rather wait till January 1st or 2nd to buy back or buy in anything new that I want to buy in. Even Palantir, I bought it, and that was the only one. Other than that, I have no plans to add anything long term. But like Gav said, I will be day trading. I think this week I posted about Apple. Like Apple is a monster. When you think Apple can't go higher, it goes higher, makes new all-time highs. In the last month, Apple has added 350 billion to its market cap, and that's worth more than I think 95 or 98% of all the S&P 500 companies. So
Yeah, it's pretty wild to see that run, and I could see it continuing as more people just
oh
basically,
yeah, the flow, right? The flow is
yeah,
just insane. Like the call options, people keep on stopping them day after day. It goes up by $5. I think last week I was seeing 155, 160, 165, now 175 for the week. And now people are buying 220 or 210 for January. Mm. It seems, I mean, after the rally Apple had, I don't see that happening, but in this world, in this market, anything is possible. So, rest in peace to all the Apple viewers. I don't get why would you go short Apple, but for the follow, I think. I think same thing happened with Tesla, right? Tesla last year, it was mostly call option buying, and Tesla was I think the top and the most the highest number of call options bought for a stock last year for I think a month in a row. Same thing happened with mRNA back in June and July, and same thing is happening to Apple right now.
yeah, we'll continue to see if this, melt up just kind of keeps moving. But I do agree with you. I've watched the flow, and people are hammering, and they're kind of using
Yep,
it as
and
their
right now,
safety
right,
net.
and Microsoft too. Like Microsoft, no one seems to be talking about that. Like Apple, right? Everyone seems to be buying calls on that, but if you look at the follow on Microsoft, it's very, very similar. And the move hasn't been as big as Apple so far.
Yeah, I saw Microsoft today. I saw the volume that was coming in on it. Definitely, just these big safe plays. It's
Yeah,
Microsoft
I think
yeah,
all the
all-time
money in the
highs
market seems to be going to Microsoft now, but
almost.
that's it. And some to
Yeah,
Google too, right? Google and Nvidia was a cash cow, I think, for the investors, but they seem to be putting the money out after a massive rally. I think even Oracle, right? 20% in the morning. How much is it still up? Yeah, 16%. Insane move. Like I've never seen Oracle do this before. Did you go see that move though on Oracle?
I had not seen a move like that on Oracle. Let's see. ORCL. Wow, 16% today. Jeez.
No,
Larry
zoom out, right?
Ellison was going after people on the call.
On the 1 year and the 5 year,
Jeez.
right? It looks like just like zoom out in the chart on the 1 year or the 5 year,
Yeah, I
right?
see
For
it.
Oracle, a big straight line, right? Like this move isn't common for Oracle, so even if you go on the all-time chart, and this stock was up, I think 1,000% in the dot-com bubble, and still the move was so big.
Craziness. Craziness. Yeah, I had not seen that. Definitely something to keep an eye on. That's the first time that they've broken through 100. Um, Pretty nuts. Cool. Well, I hear what you're saying. Definitely there could continue to be that selling. So continuing to allocate to those large caps and taking it a bit chill in this market. Good stuff, Greg. Okay. All right. So we're going to go to Matt next. Real quick before we do that, please, to everybody that's in the audience, thank you so much for being here. We love having you here. Want to just remind everybody that these speakers are awesome for taking the time out of their days, taking an hour or two, to come here, educate, share. They don't have to do this in exchange. I would love for y'all to, honor them with your follows. We really appreciate it. It makes it a lot easier for me to get them to come back on here when we see their audiences building up. And trust me, the content that they have, there's a reason that I'm following all of them and believe in what they're doing, and I'm continuously having them on Spaces. And then for the Wolf account, we're going to be hosting Spaces all week, especially now that we've got Kevin helping with the Wolf account. I run the Wolf account as well, and I will be basically moderating all of the Spaces. So if you're following the Wolf account or the Golf account, you will be seeing those Spaces when they come up on your timeline. And we're going to go over probably in a few minutes the calendar as well, which makes it very easier for you to find these spaces. And we'll talk about that. So keep an ear peeled for the calendar. But before we talk about that, let's go to you, Matt. We'd love to hear about your week in the market.
Howdy. Hey, guys. It's been an interesting week, and it's good to hear everybody's perspective here. There's a lot to be hearing the fundamental sides and the way people look at markets. If you guys are familiar with what we do, I'm primarily known as a day trader, but I trade a little bit of everything. I do swing trading, long-term investing, stocks, options. My day-to-day on my live stream is I trade index products and I trade futures. So I usually have a very kind of deep talk about the greater market dynamic, the broader spectrum of what's going on. What we particularly look at, we software assisted, we look for options positions that hint at being insurance for larger positions, and we can kind of pull out information about like where certain larger funds and firms or even market makers are positioned in the market, and we kind of use that as our own gauge of seeing what things are going on. So essentially, if somebody does fundamental analysis and they act upon that themselves, we would track their position. Essentially, people are doing their homework for us. So I'm looking for telltale signs that people are holding tight or getting in and out of a position. So some of the levels I talk about or calls that I make are strictly based on positional data. So it's more like risk and position analysis, which is maybe something that that I can share with you guys to some of the calls I've looked at today. So I know I made a couple of posts about what I've been looking at, mainly just QQQ and SPY. We dig a lot of data out of those, and I trade futures around them, around the options that go with the index ETFs. And so, they hint at which direction pressures are pushing the market. The S&P and NASDAQ, both of them actually have recovered. When you have those V-shaped kind of sell-offs, very, very, really nasty volatility, you have end of the year tax selling, and then all of a sudden market V's right back up and consolidates at the high. It's not a bearish sign yet, but it is a sign for market to come down and trade out a little bit, probably going into the next week or two. Normally, when you V up like we do now, the market tends to press slightly slower, but slightly to higher highs and pulls out. When I look at QQQ monthlies, 400 is like a rock solid wall. There's almost 100,000 just sitting there, 100,000 calls. And it's likely those are probably going to strike the money if they get squeezed right sometime before Friday, maybe Monday or Tuesday. I think that we do probably go to 401, 402. And then after that, we sell off for the rest of the year. And I don't think we sell off super hard, but I really do think that the market is going to have a hard time being bullish. Right now, you're seeing a lot of sector rotations. A lot of money moving around. Sectors that we need to be strong aren't really showing strength. Financials are the ones that we need to carry the S&P forward, and financials lost a key level today, 39, trading below it, consolidating below it. That doesn't look so hot, but then as you see, you have some stocks like Apple, Microsoft, some big mega caps are large enough to float the market higher. That's kind of, I guess, hiding or masking the fact that everything else looks bad. So really all it's telling you is that because of the inflationary state of things, people just don't want to be cash. Nobody wants to sit on money going into the new year. They're selling if they have to, for whatever reasons, tax reasons, or just to get out, get it off the books for the last quarter. But for the most part, people are trying to stay in stuff because, the stock market, as it's been rallying, one of the things to note about, why people say stocks always go up, in reality, anything that has any tangible value always goes up at the rate of inflation or further. And why we've been rallying since COVID, mostly it's not just because of economic performance or growth. It's because the stock market is also suffering from inflation, just like any price of anything else, house prices, anything. So people are putting their money in anything that they can, and it's just outpacing or following inflation as much as it can. So when people think, we've been rallying and maybe it's going to turn bearish, I kind of argue that the majority of what we've seen this year hasn't really even been rallying. I don't think the rally's even started yet, to be honest. I really just think the market's been kind of just pressing along due to inflation. Things are just becoming more expensive because that's what the nature of inflation does. And so stocks usually go up because of inflation. And even without that, rallying is an additional boost to that. And right now, there's not a lot of strength in any one particular place, but there's a lot of strength in a lot of particular stocks. So people are getting out of one thing, getting into the other. There's nothing scary about the market right now. There's nothing scary about the market 1 month, 2 months from now, looking at large positions. Some of our calculations we look for where buy and sell programs are matching gamma and delta against the market maker side of things. And those things show stability and liquidity, even up here at the highs. They're having no problem finding buyers and sellers here. A lot of the buyers are actually shorts that are getting squeezed out because the volatility is really high. A lot of the sellers of people are just jumping out of one stock and ultimately getting into another. The VIX is perfectly decaying today. There's really not a lot. Even the market's a little choppy. I really do think today, last night when futures market gapped down, I actually longed the S&P and long NASDAQ, rode it all the way up through the CPI. We had the data come in today. Everything it doesn't look good, but everything just trades before the news anyways. So I don't like to let those things, deter my investment decisions because, people try to see the news after the fact and say, oh, was that bullish or bearish? But in reality, the efficient market theory just states that these things are already pricing themselves in as the sum of everyone's homework has their investment decisions already baked into the market. So while the numbers come out and, they don't look so hot or you may think they don't look so bad, at the end of the day, inflation is part of what we're dealing with. And it's not the kind of inflation that comes from hypereconomic activity that you get from somebody opens a coffee shop, right? And then somebody opens a coffee shop across the street and someone else opens a coffee shop on the other corner. There's literally a corner in Houston where there's 3 Starbucks on each 3 of the 4 corners. It's really weird. But when you have people in that much prosperity, and prices tend to raise because you can afford to do that. You're not losing competition. That's that kind of economic activity you would expect the Fed to, want to curb so things don't get out of hand. But this type of inflation we're dealing with has to do with a lot of just the scarcity of things, and prices are going up because more like scarcity instead of abundance. So in reality, the Fed can't really act. And I know people are fearing that because inflation is going to cause the Fed to act, or, if there's we were talking about the debt ceiling earlier as well, these things, nobody in the government or in the Fed is going to do anything whatsoever to destimulate the job market. If we take this slow moving ball that just started rolling and we stop it again, or we just halt it again, then we enter into a depression we don't come out of. We were lucky to get out of this one post-COVID. Right now, nobody's going to act. They can't. The real solution to inflation is to let the market just pick back up and let competition bring prices down. And that's typically what you'll see, and that's what we're hoping to expect. And you can hear every time Jay Powell speaks, he's saying the same thing: improve labor market, because they know that's the real solution. And once the labor market starts improving, the rally that's been pacing inflation is now going to rally because of just demand and squeezing. So I'm one of those people that really think the S&P goes to 6,000, maybe 7,000 in 3 to 4 years. And I think that even if we do have another recession in 5 or 6 years, it actually comes down to these levels. So this is the middle of what I think the run is. And I really think the lower end of the 2020s are actually going to be a really booming year once we just kind of start getting people back to work and, wages start catching up, or wages start getting paid to more people, which is more money into buying stuff and more money into their 401ks, which again props and boosts the stock market. That's another thing you have to think of, right? Is when people go back to work, they have money that goes into a 401k. If they're not working, they're not necessarily doing that. And that money just floods into equities, even at these absolutely high prices. So, at the end of the day, these big mutual funds and 401ks aren't out there trying to short the market. They're trying to find the best long deal they can, which does push the market even further. So labor market improvement is just generally bullish altogether. And, I'm extremely bullish even from here, but I'm not like bullish every single day from today. I did scoop up the bottom because technically speaking, market does look strong for at least the next couple of days. And I say strong relatively, only because the VIX is in decay. 21.5 is a key level on VXX, which is the instrument I use to measure the VIX. We look at options there. Any break of 21.5 and holding there will be a bad signal for the rest of the week. So that's a good sign. VIX in decay. I don't expect the market to dip super hard today. I've been scooping up every dip that happens, trading S&P and Nasdaq futures. It's been pretty okay. I do think probably going into the middle of next week, we do push higher highs and, market goes forward. Some of the individual calls I was looking at, and Gavin is chatting with you about some of them. I had Wayfair. I mean, that guy was just gross from the start. Like about a 197 was my call for a short, and it falls. I posted in my Twitter a little bit ago about 171, give or take. I think it still has room to fall. Square, that was the one I was talking about. Square is about 190. What I'm talking about. Let me get this really quick. I'm sorry, I have my charts backwards. Yeah, Wayfair, I was looking at about a 235 short. There's really no stopping this guy. About 181, give or take, is where I see it falling. These stocks are just opening on the other side of the liquidation point where sell programs just attack it from the start. It opens and it drops. One of our calculations shows stocks like that. And Square and Wayfair were that right out the door today. Those were excellent opportunities 2 days ago. And like I say, people are getting out of one thing and then jumping into stuff like Apple and Microsoft. I'm not scared of the overall market, but I am, cautious. I do think, as I'm going to repeat from earlier, we do push slightly higher index, probably finds higher highs for the end of the year. But I think, you don't normally necessarily have a V-shaped recovery and then it immediately starts tanking. It usually fights its way slightly higher, get a couple squeezes out, some theta burn on some sold calls, and then, or some theta burn on some sold puts, and then the market crashes before that happens. So maybe 410 on QQQ, and I think probably we're going to run up to about 48 on SPY or 480 on SPY and then turn around and sell. That's my thought.
Really well put together there. And it's always like comforting because I feel like you explained the situation so well of where we've come from, what we're happening now, what you expect to happen. I have a couple individualistic questions and then can go into some bigger piece things. So one, when you're talking Wayfair here, let's say you were buying puts on it, what level would you buy those puts at? How far out?
If I was buying puts, you're talking about buying today. If I were to buy puts on Wayfair, I usually wait for those invalidation points to kind of pivot the stock down. I think 235 was my level. And normally when I have that level, I like to get, obviously, anytime I buy options, I want to make sure I've got the delta and ID in my favor. It's really hard to justify buying puts during a volatile event, especially at the bottom when something's selling. If anything, I would find a place, and if I was in the middle of a sell-off like now, I'd probably capitalize and maybe sell some calls instead above some of those invalidation points. They're very, very, very short term and just expecting it to stay lower. Chasing the market and selling puts, even though there's no real support that I can see on Wayfair, I'd at least wait for it to retrace a little bit. Nothing above 220 invalidates that trade. So if it retraced 210, I would probably look into some maybe 1 to 2 weeks out for most of these, because the market, you're just seeing people get out of one thing and get into the other. I don't think it's causing mass panic anywhere. So I don't really think anything's going to become super bearish. I think most things are going to sell off on periods of their expiration. So maybe like a week at a time. I wouldn't go any further than 2 weeks out on any of these things, to be honest. Probably Friday weeklies. Square, similar thing. If I were to buy puts and I wanted to strike in the money by next week, I'd look for probably some cheap 175s and 170s if there is any retrace, like if the market rallies a little bit today and recovers. But I would look for like next Friday. I wouldn't go too far out.
Okay, got it. And selling those calls, so those would be essentially naked calls that you would be selling there, right?
And again, to people that don't, trade options, and being very careful anytime you sell anything naked, you always have to be prepared to accumulate a position in the underlying if you are ever doing, again, no, this isn't investment advice or anything, but typically if I am selling naked, then I know I need to have everything prepared to accumulate or hedge the underlying, just so I can make sure I can delta match if I go out of bounds in my trade. So in that particular case, yes, I wouldn't be looking to buy either of those names. And selling would just be to collect some premium into the end of the year or into the end of next week. So if it does rally, of course, I'd have to accumulate the underlying if I wanted to hold the position. So
cool.
Yeah.
Cool. And then my last question I'll throw your way is, you mentioned how you were scooping the bottom here. What does that mean? Like, what opportunities do you see going into next week? Are you just buying SPY? Are you buying something else?
So this particular week, all of my focus is on the broader index, and in reality, that's really what you kind of have to see. In general, one of our indicators that we use is something that looks for deviations between the actual value of the basket itself and in a market cap weighted sense, some of the pressure implied hedging from all the sum of the stocks. So like if the stocks are implied that they need to push higher because buy programs are about to kick on to start matching delta, we have this indicator that will show that stocks have immediately started moving and that the index is undervalued based on what it should be. So the index technically should track and follow. So right now, when you see a lot of sector rotations that are very heavy like this, people like, Microsoft goes way up and Amazon goes way down, you can just see that people are just moving into the best thing they can find. And really, you just kind of want to look, engage, and see if the index itself is being sold and people are going into cash. And right now, the S&P has actually been very strong despite the volatility we've seen. So it really just shows that nobody wants to get out of the market. People are still, betting that the volatility in equities is still better than the burn of your cash and inflation in a savings account. And market's still a hot commodity even from here. So I've been scooping up the bottom, and I trade S&P futures and NASDAQ futures just because, when you're full-time day trading, I trade everything. But as far as like scalping back and forth goes, futures is a great thing for day traders who are experienced that want to get involved in something that has better tax benefits and there's no pattern day trading rule or any of that stuff. And but mostly for the taxes, a scalping instrument. It's a great way to trade the index products, but you significantly pay less on taxes in futures world. So for me, most of my day-to-day cash is made just day trading futures, and I get on the right side of the market, follow my style and system, and then trade off of that. So I've been scooping up S&P futures, NASDAQ futures. Today, S&P looks slightly stronger than NASDAQ. The NASDAQ actually shows a little bit of deflation, but the S&P is quite strong today. So,
Okay, and for those not playing futures, maybe just simple positions within the S&P.
Yeah. SPY or SPY calls or anything like that would be, if I was trading options, day trading options on those, I would be taking calls. 395 is a great level for SPY going into the end of the week next week. So
Perfect. Awesome, Matt. Thank you so much.
Yep. Thank you.
Good stuff there. Yeah, make sure you're checking out what Matt's doing, both on here and his Discord. Really good stuff all around. We got to grow his audience. He really deserves it. Okay, real quick, before I pop over to Juicy, I just want to give everybody a quick 30 seconds on the best tool that myself and Stock Market News, my co-host up here, have developed when it comes to Twitter Spaces. So if you're not already on this, you will want to be on this ASAP. Essentially, we know that it's difficult to understand when spaces are always going to be, right? There's so many happening nowadays, and you have lives, right? You have a lot going on. We're all out here doing other things besides the market. Some of us, maybe. not Gerg. He's only market. No, I'm just kidding. But for those that actually have other things that they need to balance, you really, really want to be on our Google Calendar for these spaces. So essentially, all that we've done is we've created a free Google Calendar, and each week I upload all of my spaces, stock market news spaces, stock talk weeklies. I've thrown some of Gerg's on there this week, and even other people's. And what this will allow you to do is on your phone, you'll be able to toggle on and off just on your own calendar and just see, oh, hey, here's a space, here's who's speaking, here's the title, and I can decide whether or not I'm going to go to that, way ahead of time without having to see a tweet, without having to pop in at the right time. And the simplest way to get on this is just hop into my DMs right now or into Stock Market News' DMs. DM us your email, preferably a Gmail, but it works with pretty much any. And just drop that to us, and we'll have you on it within 24 hours. You'll get an email. You'll add it right to yours. If you want to unsubscribe, it's the easiest thing. You can just remove it. You can always toggle it on and off, so it won't just be like clouding your calendar. But this way, you can come into the beginning of your week and say, hey, this week, I want to enhance my knowledge on technical analysis, on stock picking, on NFTs, on crypto. We cover all of these things. And this is the simplest way to know when those things are going to be. And it's working. We have over 1,500 people on this calendar, seeing when our spaces are going to be. And now I even upload the recordings into the notes on the calendar too. So it's basically one of the best tools you're going to find when it comes to spaces. Twitter Spaces knows about this. I work with them. I'm in a Discord with Twitter Spaces. They love the tool. There's even people from there that have asked to be on this Spaces calendar. Most people now from Twitter are actually on the calendar. So again, if you haven't already, go ahead and just drop me a DM. Ask me on the Spaces calendar, and we'll get you added right away. Please make sure that your email is in it. And that's everything on that. Stock market news. Anything you want to add to that?
Sorry, I had to get unmuted. No, that was perfect. I love it. If anyone wants to send me a DM as well, I'm up here, and I'll answer as quickly as I can. Appreciate it.
Perfect. Okay. All right. Juicy, thanks for coming on up, man. And also, if we have some time afterwards, if Sarge or Jack, if either of you guys want to come up and speak, just feel free to request. But Juicy, we'd love to go to you and hear about your week in the market.
My normal day trading, swinging a lot. So, but before the CPI came out, I did tell everybody on my team basically to get rid of all short-term swings. I'm not really usually a news guy. It's all about charts for me. But CPI and inflation and anything with the Fed will move the market. So you have to be careful into these type of events. My long-term swings, I'm still holding Apple, still holding QQQ, and I'm still holding SPY. So I have to echo everything that Dan said. I'm still broke out of
Is he breaking up for anyone else, or is it just
Yeah,
Yeah,
as soon as he
we're
said,
losing you, buddy.
no,
Yeah.
he said broke out and he broke out. Like, what the hell? Did you go see that dude? Yeah. As soon as he said,
that call?
breaking
So
out,
pretty
he
much
broke out.
Juicy, buddy? Unfortunately, you're breaking up a lot. You might want to switch onto Wi-Fi or something. Okay, it looks like he's actually reconnecting. So while he's reconnecting, I'm going to go over to stock market news since I know you have some stuff coming up, and let's hear from you.
Perfect. Yeah. So I'll keep it pretty brief on this one. I don't have too much for it. I'm a long-term investor, similar to how Brad was talking earlier. I make my moves over week-long periods, not just 1 or 2 days in there. It's kind of really what my day-to-days are, kind of just dollar cost averaging into positions I already owned and did my research into the past. And this week, and recently in general, I have slowed down a little bit. I'm still buying. I haven't sold much. I made one sale taking a big profit, and I'm considering doing another sale, which I'll talk about towards the end of this. But what I did buy, I dollar cost averaged a little bit into Square, around 185, 186. Position I already had. Actually did have to raise my cost basis because it's around $60 to $70. But I just kind of really like the company, want a larger position in it, and felt like the pullback was enough for me. And then another name that I dollar cost averaged in, this one I was able to lower my cost basis, was Redwire, ticker RDW. It's a space stock. Yeah, I bought it a little bit at 770. I haven't even checked what it's at, honestly. This is much more of a short-term swing trade for me. But we'll see what it does in the long term. I am down a decent bit on it at this point, as most people probably are, but they delayed the earnings report, and it was actually rescheduled to come today, or this week, sorry. Well, let me take another step back. So it was, we didn't get an official rescheduling notice, but for some reason, a bunch of places had it as this week that it was going to be coming up. And this week is now pretty much over, and nothing happened there. So that's an interesting one that hopefully they report earnings soon. I know they did get a notice from the SEC, so where's the earnings? But back to what I said earlier. So for me, I have actually kind of been considering selling a little bit of my Ethereum. So and now that I'm seeing an under 4K, that does make me a little bit less likely to do it. But I've owned Ethereum since 2018. I added a little bit more in 2019 and a tiny bit in early 2020, and I have a pretty big gain on it. It became my largest holding. For a while, it was my largest crypto holding. Now it's my largest holding in general. And at the point where I'm at now with it, and what I've done in similar positions on my stocks is take out my initial investment, what I put in. So I'm just playing with the house's money. So that is about where I'm at right now. I hold X. I will still, after doing that, I will still hold more, the vast majority of my Ethereum, and I plan to hold that forever. But I do want to kind of take away some of the risk as much as I can. And for me, that generally lends itself in the form of taking out my initial investment. So definitely considering doing that soon. But other than that, I'm the news guy. I'm here to long-term invest. I do switch what I'm doing with market conditions a lot, but I'm not here the expert telling you when to buy or sell specifically each week. What I would just say is, overall, if you're a long-term investor, you want to be similar to me. One of my favorite things that I've been able to do are two things. Definitely always have a little cash on the sideline. Cash for me is one of the biggest things. Being able to capitalize on opportunities that I see is really important to me. And also another thing that I really love is dollar cost averaging. Not buying my entire position at once, because I'm not the expert at timing the market, and I don't think it's very sustainable to do that. But I don't catch the bottom. Sorry, let me rephrase this. I catch a lot of bottoms, but I don't just buy the bottom. That tends to happen a lot, and I think it's a really good strategy that's worked for me. But I will throw it back to you, Wolf.
Okay, awesome stuff. I see Jack and Sarge are requesting. I didn't realize. So I've said this a couple times, but I do have Kevin from the Wolf team currently on the main Wolf account. He is hosting. He is on. We're on a bit more of a limited schedule than I thought. So we're gonna have to wrap this up by 1:10. So Jack, I'm gonna go to you if it's cool, if just for like 2 to 2.5 minutes, and then just like 2 minutes from Sarge, and then I'll just give everybody like a minute of wrap up. And Evan, did you have something else there?
I was honestly going to say that right as you said that, I accidentally brought up Sarge, and I didn't want him to put us in a whole big thing and doing whatever.
Nope.
So that was yeah, perfect.
You're all good. So I'm just gonna, if that's cool, Jack, just like a couple of minutes and Sarge a couple of minutes, and then we'll go into wrap up, and we'll be done by 1:10.
Yep, cool. I only got a couple things to say anyway. So for me, I mean, the market obviously is choppy, like everyone said. I'm 100% cash. I did a quick little scalp day trade today, but that was nothing. I think the more important idea, maybe the bigger idea is, and maybe concerning, is as these mega caps and money keeps flowing into the Apples and those large companies, the question is, if the market, if the rug is going to get pulled on the market, are people positioning to those companies because of liquidity reasons? Because it's easy to get out of them if they need to. So it's something that's always in the back of my head when I see mega caps holding the market up like this. It's kind of like when the music stops, who's the last one who's got the chair type of thing. Anyway, that's all I really wanted to mention on this. A great space today, guys. Really, really good stuff. So appreciate it.
Awesome. Thanks, Jack. I'm sure we'll be doing more again soon. And Sarge, just wanted to get a quick couple minutes from you.
Yeah, I didn't realize it was the end of the show, but I'm finding Triple Q is sending some really easy to read signals today. It's a pretty good day trading vehicle. I'm trying to day trade Amazon as well, not with as much success. Costco is a name that I really wanted to buy pre-opening this morning, but I got an assignment to write an article about it. And once I know I'm going to write about a piece, I can't take a position until after the piece is out, and the stock moves about $20. So now I'm actually looking to short it if it stays in the mid 350s, but not in any kind of big size or anything like that. I also like XXII, which is 22nd Century Group. It's a horrible little name. They make very low nicotine cigarettes. It trades under $3 a piece. I added to it for the stocks under 10 portfolio that I run for real money, and that's probably in response to this new initiative in New Zealand where they're going to try to basically make full nicotine cigarettes almost illegal. And the Biden administration, I know, is looking into something like that. If we probably wouldn't go as hard as New Zealand would in an authoritarian kind of way, but even if we lean policy in that direction, it's probably going to be good for this little company. That's about it.
Okay. Awesome. Appreciate it, Sarge. Thanks for coming up and contributing. And yeah, I'm sure we'll be doing more stuff. Maybe I'll pop onto the 4 p.m. space later, and we can get a little bit more in. But for right now, just want to go around and give everybody just, any closing thoughts plus anything that they're looking at for next week. We'll just do about a minute or two each, and then we'll be done around 1:10. Brad, you want to start?
Sure. Yeah. So I guess looking around my portfolio, the position I'm closest to nibbling on is a company called Revolve Group, which would be a little weird because my cost basis is $13 a share. So any accumulation there is gonna probably blow it up. But just a really high level overview of Revolve. It is an e-commerce platform. They do a lot of own brand work, and they have their own internal inventory and supply chain systems that allow them to sport a 55% gross profit margin, which is pretty much better than all of their competition. They sell women's dresses, which I am not an expert on, but I mean, just a quick story. When I was an undergrad, I mean, I would sit in lecture halls and half of the computer screens from my female classmates would be shopping on Revolve.com. So that was my Peter Lynch moment to look into it. And they really they focus on going out clothing. They focus on fashion shows and these live concerts and live entertainment events. So you can imagine how the pandemic was really tough for them. But still, why one of the reasons I like it so much is management kind of executed flawlessly. I mean, their demand growth flatlined, and they were still able to expand profit margins. They were still able to double profit margins and expand cash flow margins briskly, just because they were so ahead of the curve in terms of inventory management. And that's also allowing them to completely avoid any supply chain related issues right now, because they told us in an interview 9 months ago, we saw this coming and we prepared accordingly. So management is pretty fantastic at what they do. It's got a sub 50 times earnings multiple, like 48 or 49 times earnings. And it's a 20% compounder, at least a 20% compounder with fantastic margins. So that's gone in a pretty straight line from like $10-15 a share, and it topped out about 88. It's now gone to 63. So kind of trying to get over my hesitation that I have with cost basis anchoring, swallowing my pride and allowing that cost basis to go up, because the company is really more than grown into its shoes, and I think it's time. So that's probably where my next move will be, and it'll probably be sometime next week, unless things just sharply bounce back, which I would not complain about at all. But thank you for having me, Wolf. Really fascinating to hear from everybody else. I always learn a ton on these spaces just because of the different approaches and mindsets that we all have, trading the exact same market or investing in the exact same market. So always interesting. Thanks for having me. Have a great weekend, everyone.
Take care, brother. Yeah, that's a great point there, how we all have so many different approaches to what is essentially, the same thing. Really, really interesting stuff. Okay, Richard, any closing thoughts?
Yeah, I'd like to echo what Brad said. It's really cool to hear everybody's perspective. Gerg, Brad, Matt, everybody who spoke. Awesome to hear how you guys approach things. Yeah, I'm just kind of going to keep focused on managing risk above all else until the direction really, I guess, cements itself. And as always, I think it's best to trade the most when those pilot buys are working, and then kind of build on that success. And if things go the other way and you're seeing a lot of stop outs in recent trades, trade less and kind of be more selective with entries. That way you're never really putting yourself in any trouble. But yeah, thanks, Gav, for having me on again, and always a pleasure.
Awesome stuff, Richard. And everybody, make sure that you are definitely checking out everything these speakers are doing. Richard, I know, takes so much time over the weekend to just pour over charts and put together a watch list, put out his newsletter. So make sure that you're checking out what he's putting out there, because when you are trying to get an advance on this market and trying to get an advantage in trading it or investing in it, it's important to do the homework. And people like Richard and Brad and Matt and others are putting in their time over the weekend to really do that homework and figure out, where the opportunities are going to be. And they make it so easy for you by posting that stuff right to the timeline. So again, as long as you're following them, you will see that stuff. So awesome stuff all around. Okay, Gerg, any closing thoughts? Mr. Gripto. All right, I will give Gerg a minute to get back to his mic. Going to you, Matt.
Did you say Matt or did you say Mike? Or did you say Mike going
Matt.
to Matt?
Going to Matt. No mics up here.
Excellent. I was like, I'll go by Mike for a day if you guys want. That sounds cool. Closing thoughts. Well, I'd say that probably Gerg's response actually reflects my closing thoughts. There's really not much to say. Markets creeping forward. QQQ rescued itself at 396. Let's hope that holds. I really do think that, it's one of these things that, as a day trader, I tend to, date the market and never really call it back for a second date or even think about marrying it. I'm in, I'm out. Even my long-term positions aren't really that long. I mean, I guess, well, let me start with my long-term, like swing trades or like that are really on a shorter term basis. I look really no farther than like a couple weeks to a month out. And, market's so dynamic and changing. I mean, I really do think we're in the middle of the biggest bull market in history. It's just not going to be pretty for a couple months. I honestly think going forward, it just comes down to, the art form of picking the right investment now is really how you're going to get by. In periods of volatility, chasing anything is always how you're going to lose a trade. Imagine the only good trade you're going to make now is seeing something somebody hasn't seen yet. If it's moving, like, we're talking about Square and Wayfair, it's been coming down for 2 days. If now's the time you want to get on it, or now's the day you want to buy Amazon puts, you're probably late to the party. The idea is trying to short a bull market is always a silly thing to do. And if you do get lucky and you nail it at the right time, and chasing a short bull market is also a silly thing to do. Not to tell you guys not to invest one way or the other, but just you have to know why you're doing what you're doing. And somebody said in the space the other day, I think it was Sarge. It was saying like, I don't short anything unless I believe in it fundamentally, and I couldn't agree more. You never should short on technical reasons. People sell for whatever reason. Somebody liquidates their position in Apple because they like Amazon better, and they liquidate because they want to buy a yacht. They liquidate because their daughter needs braces. Who knows why they want to free up some cash? You never can predict that, but in a fundamental sense, shorting market is because you believe that something's got to go to zero for a fundamental reason that you see, that you believe nobody else sees yet. And then when you do that, you have to be ready for some burn. I mean, I'm sure everybody saw The Big Short, and Michael Berry, in that movie, accurately showed that about 2005, he's predicting the mortgage crisis that didn't really happen because of corruption and all that until like late 2007, early 2008. You take a lot of heat and a lot of burn a lot of times on shorts before you end up being right. So just keep in mind that, like, as a day trader, I'm always looking for the next long opportunity. I hate looking for shorts. I hate trying to plan that something's going to be bad because somebody's always waiting for something to dip to buy, and you can never predict who wants to do that. Instead, if I think the market's going to look bad, I'd rather just sit out and wait for things to get cheaper and then wait for things to flip long and get back in. And we might have a really long and strong bull market for the next 5 years, as long as things start to kind of like ebb and flow and the next strain of COVID doesn't shut things down again and, people get back to work. Things are going to be nice and steady, and, people are going to get credit cards easily and go out and spend money. Shelves are going to be stocked. You can finally get that PlayStation 5 you've been waiting for the last couple of years. Like, things are going to look better. And I really don't, I don't see like market topping out as an opportunity to short. And picking shorts, number one, rule of thumb is that markets never really sell from a consolidating area. They always squeeze before they sell. They usually burn some premium on puts before they let the market crash out. And usually if you're trading as well, if you're looking for like, and I'm just kind of saying like, even though there's a little downside, just be careful chasing downside. Markets, and especially the S&P, works. If you look at the third Wednesday of every month when the VIX options expire, that's always a key level where you see pivots usually because a lot of hedging takes place on options on VIX. Typically that very next Thursday is like the start of a new dawn for the S&P. So we're finishing up a volatile month. People were buying a lot of VIX calls, and they're sitting pretty heavy on expiring VIX calls that come next Wednesday. I wouldn't put it past me if we see VIX in pure decay today and yesterday that those calls are going to lose a lot of premium going forward, these 21s, 22s, 23s. And then if there's any selling, it'll come probably next Thursday, Friday, to lead an expiration on the index products. So, that third Wednesday, third Friday of the month is always a really key indicator to make bigger investment decisions, at least in my strategy. So,
Awesome stuff, Matt. Thank you so much.
no
Shout
problem.
out Flostradamus for popping back into another one of my spaces. Love to see it. All right, I have to throw the follow. They make great music. If anybody sees them up here, verified account. Okay, I know it's 109. Kevin, I didn't really have a chance to get to you. I was planning on having a little bit more time. Is there anything you want to add on your thoughts on the market this week, or you time to wrap up?
I'm gonna be completely honest. I really haven't had much time to sit down and actually watch the market. That's what I like to do. I like to play the levels. I like to scalp it, and not too much this week. I've been able to actually take a educated look at the market. So I haven't really been making many moves. Not this week.
No worries, no worries. Okay, awesome. Thank you everybody so much for joining in. If you haven't already and you want to be on the Google Calendar for our spaces, so you know when all of our spaces are next week, and we're going to be having NFT spaces with Bored Ape Yacht Club. We're going to have technical analysis. We're going to have stock picking, market sentiment, crypto. All that's coming. DM me your email, and I will add you to the Google Calendar so you'll be able to see when all of those spaces are. Additional big thanks to @WadeStonks. They came in and screen recorded this so that I can upload this to YouTube and to Spotify. Link is in my bio, so you can be able to see those recordings once they go up. Review any parts that you'd like. We'll also share out this recording. As you can see, it's being internally recorded. And that's all for today. I will be back on Spaces at 4 p.m. EST with stock market news. We're going to host FinTwit Friday, big wrap up from the week. I think Sarge will be there, probably some others, and we're just going to go over earnings, week in the market, and some stuff to look at for next week. Thank you, everybody who tuned in. We can't wait to talk with you again soon. Please make sure you're following our speakers. Follow the Wolf account so that you can see when all these spaces are happening, and we'll be chatting with you very shortly. Happy Friday, everybody. Take care. All right, Kevin, you can go ahead and end the space.